All right, guys, very warm welcome to another week ahead video. This week's video will cover the trading week running from Monday the 4th to Friday the 8th of October 2021. Now, even though there's quite a couple of events coming up this week that will be focused on, one of the key events will definitely be the RBNZ's policy meeting coming up on Wednesday. Now, you guys will recall back at the August meeting, the bank was put really between a rock and a hard place because just before, literally the day before we went into the August meeting, New Zealand got sent back into a national lockdown as a result of the Delta variant. Now, this was a really tough spot for the bank because, on the one hand, the economy was doing well enough for the bank to hike rates, being the first major central bank to hike rates post pandemic, apart from the Norges Bank, of course. But at the same time, the optics would have looked terrible if they decided to hike rates just as the country goes into a new lockdown. Now, the reasons for hiking rates from an economic point of view was because the data has been so solid. We had quarter two growth data coming in at 2.4%. We saw the unemployment rate dropping back down to pre-COVID levels around 4%. We had quarter two inflation data coming in at 3.3%. Now, that was not only above the RBNZ's 1 to 3% target band, but also the first time above that band in the last decade. Other reasons, of course, why a hike seemed imminent was the rapidly rising house prices in New Zealand, with the Kiwi government actually adding housing, of course, as an additional part of the RBNZ's remit back in February. So there's plenty of reasons for them to move forward with hikes. But due to the bad optics, the bank decided to leave rates unchanged at that meeting. But what was very important from the meeting was that they provided a very optimistic outlook by projecting 7 hikes between the fourth quarter of this year and the first half of 2023. We also had very hawkish comments after the meeting, with RBNZ's Hawkesby noting a couple of days after that the bank was actually contemplating hiking rates by 50 basis points at that August meeting, and that their decision to leave rates unchanged wasn't because they viewed COVID as this massive risk, but mainly due to the communication challenges that would have caused. Basically translated, hey, we couldn't hike rates into the lockdown; it just wouldn't have looked right. So after the hawkish comments from RBNZ's Hawkesby, markets were very quickly pricing in the potential of a 50 basis point rate hike as soon as this October 6th meeting coming up this week. We saw 2-year yields just shooting for the sky on the back of that announcement. Now, this tilt created a very clear monetary policy divergence between the RBNZ and most of the other major central banks. And with all other major central banks basically cutting their rates down to the lower bound after COVID, of course, if the RBNZ, if it meant that they just got halfway through that OCR projection of them's, that will open up a whole lot of carry attractiveness for the Kiwi dollar in the months ahead, especially against those very low yielding currencies like the euro, like the Japanese yen, like the Swiss franc, etc. Now, even though the bias for the Kiwi dollar remains firmly tilted to the upside, the current currency has had a few bumps recently. That's been from bouts of risk sentiment, with leverage funds taking some of their profits off the table, unwinding some of their positions, as well as some additional RBNZ comments as well as actions. Firstly, we had RBNZ's Hawkesby out again on the 21st of September. Now, he tried to curb some of the market's optimism for a 50 basis point hike. Because in a speech on the 21st, what he basically came out saying is he said that central banks globally tend to follow a smooth path and keep their policy rate unchanged or move in 25 basis point increments, which markets obviously took as a very clear signal from him saying that, hey, yes, last time round I said that we plan to hike by 50 basis points, but we're actually planning to hike by 25 basis points. So that immediately placed a 25 basis point hike back on the table. And as a result of that, alongside that announcement, we saw some minor repricing coming out in Kiwi 2-year yields. And then last week or the week before that, at the end of the week, we had an announcement coming out that the bank will also move forward with tightening their LVR restrictions, macroprudential policy, basically, to try and curb the housing market speculation. And that, alongside the comments from Hawkesby, was enough for the markets to completely price out the odds of a 50 basis point hike. So what's important to know about going into this week's meeting is that the market is pricing in about 100% chance of getting a 25 basis point hike from the bank. And that means that the markets will need a lot more from the bank to really move the needle in this meeting. So, with a 25 basis point hike basically fully priced in, the focus will fall on the overall tone as well as the language from the bank, with the country's vaccination rates right now sitting above 60% and case numbers not at really fear levels anymore. The bank should provide a similar type of upbeat tone compared to the August meeting. But the risk is that the challenges right now that's facing China's economy, challenges facing Australia's economy. Remember, those two are very important trade partners for New Zealand. We also have the current energy challenges facing the globe right now, and that might be enough to see the bank potentially take a more, let's say, sober stance in this meeting. And that obviously risks some potential downside for both rates as well as the spot market in the week ahead. Now, after this past week's rout we had in risk sentiment, we did see some unwind in Kiwi longs, especially from leverage funds positions. That sent the Kiwi pushing lower and reaching some very interesting support zones in the likes of the Kiwi versus the US dollar, Kiwi versus the Swiss franc, this one, the Kiwi versus the Japanese yen. So any type of overly hawkish reaction this week from the RBNZ can be very interesting to look for some upside potential from a medium-term perspective in those currency pairs. On the possible dovish side, let's say the bank has more of a dovish tilt. We would like to keep Aussie Kiwi on the radar, where even though our fundamental outlook for the Aussie dollar remains more neutral, the overall positioning for the Aussie is still in extreme net short territory right now. And that means that any potential dovish tilt from the RBNZ, combined, of course, with a potential as you were meeting from the RBA the day before, that could see some decent upside potential playing out for the Aussie Kiwi. And that's definitely a currency pair that we will be keeping a very, very close eye on in the week ahead. So in terms of a possible breakdown then of hawkish and dovish outcomes, on the hawkish side, remember a 25 basis point right now is already priced in for the market. So for the markets to be surprised by the bank on the hike front, they would need to come in with a 50 basis point hike. So that'll obviously be the biggest and first overly hawkish reaction. On the dovish side, that is if they decide not to hike. Remember, again, a 25 basis point hike is already priced in. Then, in relation to all of the energy challenges facing the globe right now, if the bank comes out and sounding a lot more concerned about where inflation could go, that can obviously see the markets preempt that as a sign that they might be moving a little bit faster in terms of rates. That can also be seen as more of a hawkish one. And then apart from that, if they, talk down the challenges facing the globe right now, facing China, regarding the virus, Australia, etc., and they decide to rather talk up their own domestic economy, their own upbeat domestic data, that should also be seen as more positive, and that'll be a sign for the markets that yes, we recognize everything going on, but we're still going to stick to our rate path, and that should be more positive. On the dovish front then, apart from a surprise no hike, is if they sound very concerned about what's going on in China and Australia right now, if they sound if they say that the challenges facing those two economies and other issues in the world, if that sparks doubt about a potential slowdown in those previous rate projections, that'll be seen as a real negative. Because remember, markets, if you take a look at that 2-year yield, markets have already started to price in quite a lot of those hikes. So, if they really disappoint and say, hey, we're very stressed, that can obviously be a negative from a dovish point of view. And apart from that, if they hammer on those macro-prudential policies like those LVR restrictions, if they give hints that they are planning to use more of that and potentially less of rates, that can also be seen as a negative, a potential dovish tilt from the bank in the week ahead. Again, in terms of a hawkish outcome, we would like to look for some upside potential in the Kiwi yen. Also remember that with US yields breaking out of that recent range it's been stuck in over the last couple of months, with US yields pushing up, remember that the Japanese yen is always very overly sensitive to moves in US 10-year yields. So when US 10-year yields push up, you normally expect the yen to push lower. So as long as yields remain higher, if we see a hawkish tilt, Kiwi yen looks very attractive. And apart from that, if we see a dovish tilt, why we're looking at Aussie Kiwi isn't from a fundamental point of view, it's more from a tactical point of view, because we do think there's still a lot of oversubscribed net shorts that can be unwound in the Aussie if we get a big enough trigger to spark some unwind in those positions. All right, guys, so that's everything from our side for this week ahead video. We hope you guys will have a fantastic week ahead. And as always, any questions, don't hesitate to let us know.